What do you point this lower level of activity down to?
So far, I think there are a number of factors that we can consider. Number one is that one has to remember that last year, 2021, was actually a record IPO year for the last 20 years. So as a start, we are actually comparing with a record year. So we are comparing very high benchmark. So, but that said, what we have been seeing in the market so far this year, not just for the first 6 months, actually, we have seen in July, things have slightly picked up. But when we compare July last year, we had about 100 deals so far this July compared to 300 last July. And we raised about $10 billion versus $47 billion in last July. Number of factors. Number one, volatility. It's very difficult to actually launch an IPO when the stock market is very volatile. The other reason is actually weak stock market performance. Unfortunately, the majority of the IPOs actually launched last year or actually the last 18 months, they have not performed well post IPOs. So unless the market becomes more stable and actually there is actually a more stronger stock market performance globally, it's more difficult to actually launch large IPOs right at this current climate with the investor sentiment.
It's interesting because private markets do work with a lag. So once you see public equities draw down, it takes a couple of months for that to start impacting private markets as well. Let me just ask you whether you think, which one of these do you think is a bigger driver? The fact that we've had this revaluation in global stock markets, particularly in the tech space, which obviously was a major leader on the IPO front, or is it just a structural phenomenon because it's becoming increasingly difficult for, say, loss-making companies to actually find a platform where they can IPO? There specifically, I'm talking about the decline in performance of SPACs, which were a very popular instrument last year, but obviously now the door is closing a little bit on companies that would have pursued an IPO down that route.
Yes, technology sector has always been the leading sector in IPO in the last couple of years, even this year when actually the IPO market is a lot slowed down. That said, as you have rightly mentioned, with actually the tightened liquidity, interest rate going up, and the story the investors are now chasing are not just growth, and they are looking at probably sustainable profit and company probably with more actually stronger growth perspective rather than loss-making technology companies, because we have seen quite a lot of them coming to the market in the last couple of years, and most of them, unfortunately, their share price have performed very, very badly, and that hurts the investor sentiment. And together with the tightened liquidity, as I just mentioned, investors are just now more careful and more choosy in allocating their capital between actually more profitable, maybe less a growth prospect, but at least they are stable and show more profitable track record. Those are probably more preferred compared to some of the high growth tech stories that we have been seeing in the last couple of years.